Welcome back to Investing Talk Podcast. Today, we're zeroing in on a real powerhouse in the semiconductor design space, Synopsys. We want to look at what we can expect from their upcoming Q3 2025 earnings report. Our aim here is pretty simple. Cut through the noise, give you a clear picture of what's coming, Synopsys's track record, which is quite impressive, actually, and, the key factors that could really influence how they perform. We want you to feel informed, but not overwhelmed by it all. Before we really jump in, though, if you find these discussions valuable, please think about subscribing, maybe liking the show, leaving a comment. It honestly helps us out a lot. And hey, if you're feeling generous, you can even buy us a coffee. Also, really important, if there's a specific company you'd like us to analyze in a future show, just drop its name in the comments below. We do read those. Okay, so Synopsys, a company many people might not, know directly by name, but their technology is just absolutely foundational to the digital world we live in. Seriously. Their fingerprints are kind of all over almost every advanced chip. So what is it they actually do, and why are they so critical right now, especially with this whole AI explosion?
Yeah, Synopsys is a leader in what's called electronic design automation, or EDA software. Think of it like this. Imagine the incredibly complex blueprints for, say, a modern skyscraper. But instead of steel and concrete, it's billions, literally billions of transistors, all needing to work perfectly together. EDA software provides the virtual tools, everything from the initial design, simulation, verification, even the physical layout. It's what chip engineers use to actually create these incredibly intricate silicon designs.
Wow, okay.
Without EDA, today's advanced chips, they just couldn't be made. As simple as that. Their role is absolutely central to designing and verifying integrated circuits.
Yeah.
That makes them, indispensable in the semiconductor ecosystem. And especially now, as you said, with a huge demand for advanced AI chips.
Right.
They're basically providing the essential tools, the picks and shovels in this digital gold rush, if you like.
That's a great way to put it. Picks and shovels. Okay. So let's start unpacking this upcoming report then. When should we actually be looking out for Synopsys's Q3 2025 earnings? And what are the analysts, generally expecting?
Okay, so the date to mark is Tuesday, September 9th, 2025. That's when they're scheduled to report their fiscal Q3 results. It'll be after the market closes. And then the conference call follows at 2 p.m. Pacific time, which is 5 p.m. Eastern.
September 9th after the bell. Got it.
Yep. And when we look at the analyst consensus, the key numbers everyone will be watching are revenue and earnings per share, EPS. Right now, the market's anticipating revenue around $1.77 billion.
Okay, $1.77 billion.
And an EPS projected at $3.84 per share.
$3.84.
All right. What's interesting is there isn't really a widely cited whisper number for this specific quarter from the major data providers.
A whisper number. Can you maybe quickly explain what that means for listeners who might not have heard that term?
Sure, absolutely. A whisper number is basically the unofficial, often sort of unwritten earnings expectation that circulates among traders and institutional investors. It can sometimes be different from the official analyst consensus numbers we just talked about. It often reflects more, let's say, speculative sentiment right before the release.
Ah, okay. Like the street's unofficial guess.
Exactly. The fact that there isn't a prominent one for Synopsys this time might suggest, well, maybe analysts are generally aligned, or perhaps just less intense short-term speculation compared to some other stocks. Either way, for you listening, those consensus figures of $1.77 billion revenue, 3.824 EPS, those are the immediate benchmarks Synopsys' results will be measured against.
That makes sense. Good clarification. Okay, now looking back is often key, right? To understand where a company might be going. How has Synopsys actually performed against these expectations historically? Do they usually meet them, beat them, or sometimes miss? This is where it gets really interesting, I think.
Yeah, and Synopsys actually has a strong history here, very strong, in fact. Mostly positive earnings surprises. For example, just last quarter, Q2 of fiscal 25, they reported an EPS of $3.67. The consensus estimate was $3.39, so that was a beat of over 8%. Pretty significant.
Wow, over 8%. That's substantial.
It is. And while we don't have every single past quarter's detailed data right in front of us, the historical record generally shows consistent performance above consensus in recent quarters. That kind of consistency, it tends to build confidence among investors over time.
Yeah, you'd think so. Impressive consistency. But here's something interesting our sources mentioned. How does the stock typically react right after these reports? Does it, soar on these beats, or is it sometimes more muted?
That's a really good observation, and it is kind of a puzzle sometimes. The post-earnings price reaction has generally speaking, been quite measured. Some sources point to, minor dips even after a beat, like maybe an Axis 1.57% move after the last reported quarter.
Interesting. So they beat, but the stock doesn't always pop significantly.
Right. So while they often beat expectations, the immediate market reaction isn't always this dramatic surge upwards you might expect.
Why do you think that is? Is the market just expecting them to beat or something else?
Could be a few things. Part of it might be that the market has, kind of priced in Synopsys's strong performance to some extent. These beats are almost becoming the expectation, the new baseline, setting a higher bar maybe.
Right, the bar just keeps getting higher.
Exactly. And also, remember, their business model. They're an enterprise software and IP provider. These are often viewed as longer-term growth stories, maybe less prone to the wild, immediate swings you see with, say, a hot consumer tech gadget launch. The focus for serious investors often shifts quickly to the quality of the beat, and maybe even more importantly, what they say about the future, the forward-looking commentary.
The guidance. Okay.
Yeah. And beyond just the quarterly surprises, it's really worth noting the underlying trends. Their revenue has consistently shown double-digit year-over-year growth. That's strong. And EPS has also trended upwards, helped by expanding margins. This all points to a really healthy underlying business trajectory, fundamental strength that goes beyond just the immediate reaction to one earnings report.
Okay, solid fundamentals, consistent beats, but maybe muted immediate reactions. Got it. So we've looked at the numbers, the history. Let's step back a bit from the balance sheet. What's been happening around Synopsys this past quarter? Any big company-specific news or broader sector trends that could really be influencing things?
Well, on the company-specific news front, there has been one single huge headline-grabbing announcement that's been widely cited for this past quarter based on our review. You'd want to check their investor relations site for the very latest official updates, of course.
Right.
However, Synopsys is known for a kind of continuous stream of smaller but still very significant developments, product enhancements, strategic moves, things like advancements in their digital twin technology for chip verification that's critical for these complex AI designs, and ongoing partnerships like with cloud providers to expand EDA capabilities in the cloud. These aren't necessarily big news flashes every week, but they steadily build their competitive advantage, their moat. So steady progress under the radar, reinforcing their position, pretty much. And then if we connect this to the bigger picture, the whole EDA and semiconductor software sector, well, it continues to benefit massively from all this demand around AI and advanced chip design. Synopsys isn't just, riding the AI wave. In a way, they're helping design the surfboard.
Nice analogy.
Think about it. Every new AI chip, especially the ones pushing into 3 nanometer or even 2 nanometer processes, they require incredibly sophisticated design and verification tools. Synopsys's tools, particularly things like their Fusion compiler and their advanced verification suites, they're becoming almost non-negotiable for these really cutting-edge projects.
So they're becoming essential infrastructure, basically.
Exactly. That gives them a very sticky competitive advantage. Customers get locked in a good way for Synopsys.
That's a powerful position to be in. So given these really strong sector tailwinds and their sort of indispensable role, what's the general feeling from analysts about Synopsys? Are they generally positive?
Yeah, the analyst commentary generally reflects a bullish to neutral stance overall. While everyone acknowledges the broader tech market can be volatile, right, there's still a largely positive outlook specifically for Synopsys. And it's precisely because of those strong sector tailwinds we just talked about. They see the company as just extremely well-positioned to capitalize on this ongoing and frankly accelerating demand for advanced chip design tools. The big picture, the secular trends, are very much working in their favor.
Okay, so bringing this all together now, the history, the current climate, the analyst view.
Yeah.
What does this mean for the upcoming report itself? What are the potential scenarios we might see play out? And importantly, for you listening, what should you be focusing on most closely when that report drops?
Right, we can map out a couple of main scenarios, realistically. First, let's think about the bullish case. Here, Synopsys doesn't just beat the consensus on revenue and EPS, which, as we said, they often do. But critically, they'd also deliver strong forward guidance. That guidance would ideally show, maybe, an accelerated pipeline of new design starts, especially in those high-growth areas like custom AI chips, ASICs. We'd also want to see continued margin expansion, showing they still have pricing power for their essential tools. That combination would signal continued market leadership and really robust future growth prospects.
That sounds like the ideal outcome for them. What about the other side?
Okay, so the bearish case. This wouldn't necessarily just be a miss on the past quarter's revenue, though that would hurt. A bigger concern might be if their bookings came in light. Bookings are basically orders for future software licenses and services.
Ah, the pipeline.
Exactly. Light bookings could hint at a softening in future demand.
Hmm.
Maybe due to broader economic pressures, maybe some companies are pausing big new design projects. Also, any sign of margin compression would be a red flag. That could suggest maybe increased competition or perhaps less leverage in their pricing. And of course, disappointing forward guidance would be the clearest bearish signal.
So it really comes down to the future outlook again.
It really does. What's fascinating here, and maybe the single most important thing for listeners to track, isn't just the Q3 numbers themselves, but absolutely the forward bookings and guidance. That, plus the commentary they provide on design activities specifically, what they're seeing from AI projects from the big hyperscale cloud clients, that's going to be critical. It gives you the best insight into Synopsys' future trajectory. It tells you not just where they've been, but crucially, where they believe they're heading.
That makes perfect sense. So when they give that forward guidance, what specific details, maybe beyond just the headline revenue number, should our listeners be really tuning into to get that deeper understanding you're talking about?
That's a really great question. It's about looking beneath the surface number. Pay close attention to their commentary on the mix of revenue, specifically software subscription revenue versus older perpetual licenses. A growing subscription base means more predictable, recurring revenue. That's generally seen as positive.
Okay, subscription mix. What else?
Also, listen for any details on new design wins. Are they landing significant new customers? Or maybe an acceleration in new project starts, especially for those cutting-edge chips, AI, high-performance computing. Are existing customers buying more tools, expanding their usage? Or is growth coming from winning new strategic clients?
Right. Where is the growth coming from?
Exactly. Those are the real indicators, the tea leaves, if you will, for their long-term growth path and how strong their competitive position really is.
Fantastic detail. Okay, given everything we've discussed, the history, the strong sector, the potential scenarios, what to watch for, what's your overall leaning, your confidence level for these upcoming earnings?
Overall, I'd say the leaning is neutral to bullish.
Mhm.
If I had to put a number on it, maybe a confidence score of, say, 7 out of 10.
Okay, 7 out of 10. Pretty confident.
Yeah, the rationale is pretty solid.
Yeah.
You've got that consistent history of positive earnings surprises. You've got this highly favorable sector backdrop, really fueled by AI and advanced chip design needs.
Mm-hmm.
And Synopsys' foundational role just makes them incredibly resilient. However, you always have to acknowledge the buts. Broader tech market volatility is always a factor, and there's always some inherent uncertainty around future guidance until they actually release it. No company exists in a bubble, right? External forces can always have an impact.
True. Always important to remember the risks.
Definitely. And just quickly, for anyone thinking about trading strategies around the earnings release itself, these events often trigger significant price moves, high volatility. So if the implied volatility in the options market isn't already sky high, some traders might look at strategies like straddles or strangles. These try to profit from a big move, regardless of direction.
Betting on volatility itself.
Exactly. But they come with their own risks, especially if the expected move is already priced in. For people just investing in the stock directly, maybe waiting until after the earnings call gives you more information and potentially reduces that volatility risk.
Mm.
But the flip side is you could miss some immediate upside if Synopsys delivers another strong beat and positive guidance. It's always that trade-off between risk and potential reward.
A classic investing dilemma. Well, this has been a really insightful exploration of Synopsys and what's coming up. We've covered a lot analyst expectations, their historical performance, that crucial role they play, especially with AI demand. And importantly, what to really watch for in their forward guidance, those booking numbers, the commentary on design activity. For you, the listener, just to reiterate that forward guidance is often the most telling piece of the puzzle for a growth company like Synopsys. It really lays out the map for where they see things going.
Absolutely. And as we wrap up this discussion on Synopsys, maybe here's a final thought for you to consider. With all the increasing geopolitical tensions we see and this global push for countries to have their own semiconductor independence, how might a company like Synopsys, which sits right at the very foundation of chip design, how might it become viewed not just as a commercial powerhouse, but maybe even as a kind of strategic national asset for countries trying to secure their own technological future? It's a bigger picture question, but definitely worth thinking about as this whole sector continues to evolve so rapidly.
That's a really interesting angle. Synopsys as a strategic asset. Definitely something to mull over. Well, thank you again for joining us for this discussion on Synopsys. We genuinely hope it's given you some valuable insights. If you enjoyed the conversation, please do subscribe, like the show, and maybe leave us a comment. It really helps us reach more curious minds like yours. Until next time, stay well informed and stay curious.